Welcome and thank you everyone for joining us for today's PENTalk. If you have any questions during the presentation, please submit them through the question box and we will follow up with you after the presentation. Tomorrow you will receive an email with a link to replay today's broadcast. So let's get started. Hosting today is Kate Blake, Instructional Designer and Technology Trainer at Contegra. Kate has been with us since the beginning of her career, where she started in the retirement benefits field. Kate is going to provide an overview of best practices when tackling 5500 season. And with that, I will now hand things over to you, Kate.
All right, great. Well, thank you so much, Lizzie, and thank you everybody for taking the time out of your schedule to join us today. I have two main agenda items that I would like to cover. Changes to the Form 5500 process that we've seen as a result of the Secure Act, and a little bit about how that ties into the Form 5500 prep, filing process, and how we can help set your clients in turn up for success. So there were a lot of changes that the Secure Act brought to the Form 5500 process. And my goal today is I'm going to talk about the changes. I'm going to show you some of the sample forms and things like that. But, you know, when I like to approach this, I like to think about the perspective of how can I distill this into information that will be useful and actionable for my clients? And I want to help you position this information in that way for your clients. So we'll start out with just a little bit of background about what occurred here with the Secure Act, because it did happen several years ago. So first off, why are we seeing changes to the 5500 process? Well, 5500 filings are the DOL's main source of information and data on the operations, funding, and the benefits of all the plans that file, which the most recent statistic that I've seen is 864,000 of these plans. And it's also the primary public disclosure document for the average citizen and for plan participants as well. So, I mean, I know for me as a retirement plan practitioner, sometimes I can fall into the mistaken trap of just having the Form 5500 be another thing to check off my list of tasks that I do during the year. But it is really important when it comes to disclosure and when it comes to information sharing. So a little bit of background. On February 24th, 2023, the Employee Benefits Security Administration, IRS, Treasury, and PBGC together released final forms revisions and final rules related to the Form 5500. Before this, there was a notice of proposed rulemaking that was published in September 2021. And this came on the heels of the Secure Act, which passed at the end of 2019, that kind of set all this up. So they started with the notice of proposed rulemaking. And during this process, this was back in 2021, they solicited public comments. And during that time period, they actually made two subsequent forms revisions in December 21 and May 22, based on feedback in those comments from the practitioner community. And now all these changes that were originally teed up with the Secure Act way back in 2019, then going into the notice of proposed rulemaking in 2021, followed by public comment, followed by 2 rounds of changes. Now all this is effective for the 2023 plan year. And that, of course, is for 1/1 plans, the filing that we're going to do this year in 2024. So it's been a long road to get here. And I tell you this because I think that there are 2 important lessons in this long-winded story that we can take away that may be important for clients. Number 1 is the long timeline of regulatory changes. So for many of us, Secure Act is well in the rearview mirror. After that, we've since had CARES, Secure 2.0, a lot of additional legislation coming out. But because of kind of the long runway that it takes to get this stuff up and running, and then the long runway too when it comes to filing, we're always looking back 1 year, it takes a while for this stuff to kind of hit our desks. The other important lesson, I think, that is a takeaway for clients is that we should provide input on proposed changes when we're given the opportunity. The DOL really took the feedback from the practitioner community seriously here with some of the changes and revisions that they made that I'll show you in just a moment. So, they read what we write to them. And the reason why I think that this is important is because I have in my notes here, it says additional changes coming. So there's a DOL fact sheet that was released about all these changes that we're about to talk about. And it says that the Federal Register notices don't contain certain elements of some of this stuff that we're going to talk about today. It goes on to say, because they're deferred for further consideration as part of a separate overall improvement project for the Form 5500 annual return. What they're saying here is we reserve the right to make additional changes to the Form 5500 going forward. So I think it behooves us all, to keep our eyes on the skies on this topic, because additional changes may be forthcoming. They're saying it in black and white, and they do, as we'll see, really take into consideration public feedback. That little blurb that I just read, by the way, is on the DOL fact sheet, changes for the 2023 Form 5500, Section F. Okay, now that you've sat through my history lesson about how long it's taken these changes to hit our desks, why it's important to know about these changes, and the potential for changes in the future, let's actually talk about what's happening now with this year's filing. So we have a few little tweaks to the Form 5500. One is the presence of defined contribution group, or DCG, reporting arrangements. So this is a consolidated Form 5500 reporting option for certain groups of DC plans. For those of you who were paying attention to the original Secure Act, you may know these as groups of plans, or GOPs, GOPs. That idea has now morphed into the defined contribution group, or DCG. If using this approach, there is a new Schedule DCG that I'll show you a sample of in just a moment. And there's a few things to know about this reporting arrangement. So they'll generally be subject to the Form 5500 requirements for large plans. So what that means is that if a plan would otherwise require an audit, it still requires a separate plan level audit by an independent qualified public accountant under this arrangement. The main benefit of a DCG is that it has a single Form 5500. But unlike some other group plan arrangements, they all have their own plan documents. So this is a way for unrelated employers to come together and essentially have a single Form 5500 filing with this new Schedule DCG, which you can see here. So we've got DCG information here, individual information, individual plan information. It's just looking for, basic information about the plan's operations, the name of the DCG sponsor, and things like that. In addition to the DCGs, there's also improved group plan arrangement reporting. So this is for, I wrote multiple employer plans here, but it can actually be for a variety of different types of group plan arrangements. You can see under Section 1, we'll ask you to identify the type of multiple employer plan. So it could be an association retirement plan, a professional employer organization plan, a PEP, or other. So this is a new form. Section 1, as you can see, essentially is just asking to define the type. Section 2, it's a little bit cut off here, but you can see it's looking for participating employer information. So the names and EINs of all participating employers. And then Part 3, which is not shown here, there is a section for pooled employer plan information. So this is a new form, and the intention here is to provide some additional transparency. which on MEPs, PEPs, and other group plan arrangements, we really have not had up until this point. It's worth noting, by the way, I mentioned earlier that there was the notice of proposed rulemaking that occurred in September 2021, and then there were two subsequent forms revisions in December 21 and May 22. Those forms revisions were to these schedules. And this is why it's so important to be aware of what's coming down the pipeline, both the changes that are happening this year and any potential changes, because some of the comments that were received were, some of these requirements are a little onerous. Can we streamline this at all? And indeed, that is what happened with the revisions that occurred. So pleased to see that, that dialogue between the retirement community and the IRS, DOL, and other agencies involved in this. So that is a little bit more work for retirement plan practitioners. It's probably one additional schedule, depending on which group you fall into, if you fall into any of those groups, either a DCG or a group plan arrangement. But one area where we see some streamlining and maybe removal of some work has to do with the determination of what is a large plan. So previously, a plan is considered to be a large filer if there are over 100 employees. There are some transition rules, of course, whether or not they have a balance in the plan. So that's the key. Under the new rules, a plan is considered to be a large filer if there are over 100 employees with balances. So what's happening here is that the new rules are allowing employers to disregard employees without balances, reducing the amount of plans that are required to obtain an audit, and in the process, reducing expenses for those plans. That DOL fact sheet that I referenced earlier indicated that overall, these changes are expected to reduce overall filing costs by $95 million annually. They did not provide a breakdown, but if I had to guess, I would imagine that in large part comes from formerly large plans that may now be considered small plans because they may have a lot of employees who don't have balances. And I think that this is really important, specifically if we consider the demographics that it would impact. So when I think about some of the clients that I've had in the past, it's really been a mix. I've had corporations, I've had banks and credit unions, I've had mom and pop businesses. I would say a more established corporation or a bank or a credit union is better able to absorb the cost of a plan audit, which of course can be, upwards of $10,000. But if I think about some of the other employers that I've had, I worked with a restaurant that had quite a bit of turnover. It also had auto enrollment, which of course is the best practice now. But what that resulted in is a lot of employees coming into the plan, maybe opting out of auto enrollment and just being out there with a zero balance. That could, under the old rules, potentially cause an employer to become a large filer, even if they don't have a large population of employees with balances. So I'm really happy to see this new rule because, again, I think that the type of employer that it will positively impact is exactly the type of employer that we really should be targeting when it comes to, making retirement plans more accessible. There were some other reporting changes, a couple of miscellaneous things I just wanted to share with you. There is a breakout of reporting of administrative expenses that is now required to be completed, and that is on the Schedule H. So that adds some breakout categories to the administrative expenses category, and the purpose there is to improve fee and expense transparency. I, too, think that this is a positive enhancement, even though it is, additional categories. I think that expenses are one area on the Form 5500 that the clients that I've worked with have had difficulty understanding. So I think that additional transparency there will be helpful. because, as we said at the beginning of this, that Form 5500, whether we think about it every day or not, is the primary disclosure document. So thinking about us as practitioners, advisors, people who work with books of business, if we have that more robust and useful information available on the Schedule H going forward, I mean, that's just a positive win for us in terms of our fee discussions. And again, it improves access because it helps clients better understand these plans. A couple of changes to DB plans. There are some improvements in financial and funding reporting on PBGC covered DB plans. That's going to be changes to the Schedule R and the Schedule SB. And then additionally, there are a couple of new compliance questions to improve tax oversight and compliance of qualified retirement plans. So overall, a positive change. We have two new schedules, the Schedule DCG and the Schedule MEP. We have a couple of additional categories on this that are going to help give us additional compliance and fee transparency. And we probably have a whole bulk of employers out there who previously were large plans who may now be small plans, which is a huge win for those employers. Okay, so those are some of the legislative changes that we have coming down the pipeline to our desks this year. With the last couple minutes here, though, I did just want to spend some time talking about the prep and the filing process, just so that we can all streamline this process as best as we can for our mutual clients. So as far as our Form 5500 service models, we typically prepare the Form 5500, as you probably are aware. However, one area where we do tend to get questions is in relation to the filing, the actual, filing of the form. Whether or not we file on behalf of the client depends on the services that we provide, although we do have the capability to do so. If we are the 316 administrative fiduciary, in that case, we will file the Form 5500 on the client's behalf. So we will draft and file. If we are not the 316, then we will require the client to file. This is something that I always hope all of our clients know, but I have seen it happen where a client wasn't sure whether or not we were going to file. They didn't ask us, and they ended up not filing. So we just always want to make sure that we are aware so that we can give our clients good information so that they are prepared when the time comes. I recall another situation for a small employer where, I think they were probably aware that they had to file, but the employer had just one person kind of wearing multiple hats in HR, and they happened to be on vacation on the date that the filing was due, and the backup person didn't have credentials to file. So you never know what could happen. Knowledge is power, so we should all make sure that we know what types of services are being provided to our mutual clients so that we can best guide them. Let's talk just for a moment about large plans. So according to the DOL and EBSA, it's estimated that 30% of plan audits have what they categorize as unacceptable major deficiencies, putting participants and benefits at risk in those plans. I wanted to say this because there are a couple of things that large plan filers, in my experience, can do to set the stage for a successful audit. First, understand whether or not an audit is required. You want to make sure that an auditor is engaged, but also make sure that the census data for the plan has been submitted to Pentegra in good order. And as an advisor or partner to a plan, this is where you can lend a little bit of additional value. It's worth noting that we did change our census remission protocol this year. So if you haven't checked in with your clients on the status of their census, it may be worth a call or just a quick email. Just say, hey, have you submitted the spreadsheet to Pentegra? Is the testing done for your plan? We want to make sure that all of that is completed before we start down the path of a Form 5500 audit. Now is the time. So if an employer needs help, again, we understand it's a totally new portal this year, so it may very well be possible that an employer needs a little bit of hand-holding through the process. I would too if it was my first time on a new portal. So if any of our mutual clients do need help, again, communication is key. Let us know. We'll make sure to get the information or work with them to get the information that we need. Large plans are also subject to audits. So the purpose of the audit is to ensure that the plan is operating in compliance with its documents and with regulation. It's typically kind of the same stuff from year to year that we see on the audits, but I just kind of wanted to put a list because sometimes I think employers, especially if it's somebody new to, say, an HR department who doesn't work on a plan a lot, they may not necessarily know what an auditor is going to ask for. So for clients who ask, or sometimes I just proactively share this with audit clients just to put their mind at ease and help them prep, I typically tell them that certain items might be examined, and I give the examples here: employee and employer contributions, distributions, participant eligibility testing, allocations to participant accounts, vesting, and forfeiture allocation. We're happy to walk clients through any of these topics. These are all relatively easy things to make sure, are up to date. Just make sure that the payrolls are remitted on time, things of that nature. Make sure that the census is in so that we can do the testing. But, sometimes I think that employers can tend to kind of ostrich it and stick their heads in the sand a little bit on some of these items. So again, this is just an area where communication is important, and the more that we can prep clients for audits, the more they will succeed. The auditor will also review the draft of the Form 5500 prior to the filing, excuse me, to check for any discrepancies in data entry or calculations. If any edits are needed, the auditor typically communicates with the TPA, which in that case is us at Pentegra, for more information and to potentially update the Form 5500 prior to filing. Late deposits are another area to be aware of as we head into 5500 season. So again, first we want to make sure that they've got that census data in, that the testing is done, that they know whether or not they're a large or small plan and whether or not there are any changes to their status. And then we want to ask them, do you have any late deposits out there? Because, of course, the Form 5500 requires disclosure, and as a result, it's a best practice to complete any necessary correction before the annual Form 5500 is filed for those associated late deposits. Let's just make sure to proactively button up any issues now before we go into audit land over the summer. This is just a note about our general practice here at Pentegra, because we do occasionally get questions from clients on this as well, just around extensions. I think everybody probably is aware that for calendar year plans, the Form 5500 filing deadline is 7 months after the plan year end, but an extension may be filed, which grants an additional 2.5 months. Just for our policy, we usually place most plans on an extension in order to allow for additional time. So with that in mind, the 2024 filing deadline for a plan on an extension is October 15th, 2024. So if you have a client who is not sure whether or not they are on extension, I would wager they probably are, but you can always reach out to us to double check. So just to wrap up, we can really offer the best possible service to our mutual clients by making sure that they have a solid understanding of the Form 5500 process, what services we provide, which almost always includes drafting and typically includes filing, where we are the 316 as mentioned. Again, most plans are placed on extension in case you get any questions about that. We want to make sure that anybody who's near 100 participants is aware of that rule change in large filer status. We want to ensure that the census data submission is done, that there are no late deposits outstanding. And I didn't put a bullet point on here, but I think it's worth mentioning that I think it's important for clients to understand this process. Again, just to kind of bring it back home to what we started with, the Secure Act was passed at the end of 2019. It's hard to believe that we're talking in 2024, 5 years later, about rules in conjunction with that legislation that are just coming online now. But that is the nature of the industry. Sometimes I think that clients get a little bit, I don't want to use the word impatient because I don't think they understand the length of time it takes for these things to go live, but they get a little bit, concerned. Are we operating in compliance with, everything that occurred in the Secure Act and things like that? So helping our clients have that understanding of the timeline can just help put their mind at ease from a regulatory perspective. Also, it can encourage clients to provide their feedback. So before we wrap up today, I just want to show you one more, what I think is a really useful document that we are going to share with you in our follow-up tomorrow. So it opens in a PDF, but I just want to show you the link. It's from the Federal Register, and let me open the PDF to show you. So this has all the final forms, as you can see, and instructions revisions for the Form 5500 annual return, all the changes for plan years, for 2023 plan years. But what this also has, if you take a look at it, I'm just going to scroll through. It gives all the detail that I started with about how many plans are filing and the details around the dollars involved in this, if you would like to share that background with your clients. It also goes into great detail about that long runway to setting all this up that I spoke about, which sometimes can help clients place that into context. Again, just putting their mind at ease from a regulatory perspective. But what I really wanted to show you in here, let me just find an example here, is the feedback. So if we go through this, specifically it was around the DCG and the MEP reporting. This whole document is just filled with feedback from the retirement plan community. So there were some public comments on this one specifically about the scheduled DCG, but they will go on to quote public comments, which is just a really neat way of seeing the system in action. Sometimes I think we wonder, does our feedback really matter? And I really think it does, and this is a great example of that. We can see people's comments codified into the Federal Register, and we can see the direct impact on the streamlining of the 2 new schedules that are coming online this year. And again, I say this just because the IRS did indicate in their fact sheet that additional changes may be coming to the overall Form 5500 process. So if you have clients out there who feel this process is onerous, would like to learn more about it, or are just curious about how the system works, keeping an eye on this discussion is important and a really great way to get them involved in the conversation. So again, we'll be sharing this link tomorrow for anybody who's interested. It also has, on average, the number of hours that it takes to complete a Form 5500 filing, which quantifies the work effort a little bit, and just such a wealth of information. So I hope that you find it as useful as I did too in preparing today's presentation. So with that, I think I'm down to about a minute left. So Lizzie, I'll turn it back to you to close us out.
Great, thank you. And thank you, Kate, and everyone for attending today's PENTalk. As mentioned earlier, you will receive a recording of the presentation tomorrow, along with a link for this piece that Kate did just share. Thank you, and have a great rest of your day.